This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Korean concern. The defense secretary says the U.S. sees a real and clear danger from North Korea, and stocks suffer a triple-digit sell-off.
Housing blueprint. Is there a plan afoot to make home loans more available to customers with weaker credit? The pros and cons of such a move.
And refund fraud, the $5 billion problem that targets you, and why it's getting worse. All that and more coming up tonight. Good evening, everybody, and welcome. I'm Tyler Matheson.
And I'm Sue Herrera. I'm filling in tonight for Susie Garrett. She has the evening off. Ty, politics really rattled investors today.
Absolutely, they did. You know, stocks retreated broadly today in the worst day for equities since way back on February 25. Two economic reports get a share of the blame. A gauge of service industry activity came in lower than expected, as did a widely watched private measure of payroll gains. Now, those rising tensions on the Korean peninsula compounded the worries and the sell-off, especially from midday on. Those fears of a weaker than expected economy also hit oil and metals. Gold, by the way, touched its lowest level since last June 28. Financials and energy shares led stocks lower, and at the close in New York today, the Dow Industrials were off 112 points at 14,550. The S&P 500 was down 16.5 at 1553 and change, and the Nasdaq, the biggest percentage loser here, was down 36 to 3218. Well, an interesting trend developing in the market, if you believe as goes the Dow Transports, so go the Dow Industrials. You may want to take a look here. For the first 3 days of April, the transports are down about 4%, while the Dow Industrials are roughly break even. Now, this is significant because, as you can see on this graphic, over the past 20 years or so, the transports and the industrials, tend to move pretty much in lockstep. And 2 points of divergence of note here on this chart. The first from 1999 to 2002, and the second between 07 and 08 did coincide with major stock market downturns.
And something else to think about, the Barclays U.S. Aggregate Bond Index, which is akin to the S&P 500 index only for bonds, was negative in the first quarter, and that is very rare. Here to give us his take on the state of the fixed income market and the challenges that lie ahead for bond investors is Bob Arwara. He's the head of fixed income at Vanguard. Welcome, Bob. Nice to have you here. First of all, tell me what you read into this very rare decline in what's called the Ag Index.
Well, what happened in the past 3 months is that really yields in 15-year and longer Treasury and corporate securities just backed up a little bit. Shorter and intermediate yields really were unchanged. So it was a relatively small change which resulted in that slight negative performance.
You know, Bob, a fair number of market watchers are worried about the amount of money that remains in bond funds, particularly in long-term bond funds, particularly in treasuries. They worry that there may be a bubble or that a big bear market may be coming. Do you worry about that?
Well, I think it's certainly a concern given the historically low yields that we're dealing with right now. But don't forget that the Federal Reserve has clearly said by keeping short rates low and by buying a lot of longer-term treasuries that they want yields to remain low. They're acting as a very powerful depressant on the market. And really, I don't see any signs that they're going to be moving off that policy unless we get a pickup in inflation. And I would defy anybody to tell me what sector out in the economy has pricing power right at the moment.
Given that, then, if you want to go into the fixed income market, where do you see some continued opportunity, given the fact that you think rates are going to be on the low side for so much longer?
Sure. That said, there is a risk that rates could move up, and I would stick to short and intermediate maturities in terms of particular sectors that we like right now are banks that are investment grade. If you're a high income tax bracket investor and unfortunately many of us are with the changes in the tax rules, single A-rated munis look quite attractive. And then finally, this is more for institutional type investors. AAA rated commercial mortgage-backed securities has a good combination of yield and credit quality right at the moment.
You know, a fair number of people have moved into higher yield bonds as the economy has generally been performing reasonably well. Default rates are down, and it is the place where you get higher yield, obviously. That's why they call them high yield bonds. Are there risks there, and is that trade getting crowded?
I definitely think it is. If you look at the absolute yield to maturity or yield to worst that you can buy, it's basically at historic lows right now. You're right, everybody's been piling in, and I'm beginning to wonder if it's looking for yield in all the wrong places. Particularly the junkiest of the junk, the CCC rated bonds have had a very powerful quarter. So I agree with you. I think there's too many people playing in that market right now. I'd be very cautious.
It's interesting, is it not, at the same time that we have the stock market hitting new all-time highs, and in this latest quarter, we also have the 10-year yield down at very, very low levels. And usually you don't see that. These are very unusual times, certainly, but can that dynamic continue?
I think it can because of the Federal Reserve. Chairman Bernanke termed lasts through January of 2014. And, you know, there's speculation about his successor. I personally think it's going to be Janet Yellen, and she is definitely on board with the same type of monetary policy until the unemployment rate drops significantly. And I think we have a long ways, and it's going to take a long time to get down to unemployment rates that the Fed will be comfortable with starting to tighten monetary policy.
All right, Bob, thank you very much. We appreciate you being with us. Bob Auwaerter, head of fixed income at Vanguard.
The U.S. is sending an advanced missile defense battery to Guam in the latest response to escalating tensions on the Korean peninsula. Defense Secretary Chuck Hagel using tough language in response to the North Korean threats today.
Some of the actions they've taken over the last few weeks present a real and clear danger and threat to the interests, certainly, of our allies, starting with South Korea and Japan, and also the threats that the North Koreans have leveled directly at the United States regarding our base in Guam, threatened Hawaii, threatened the west coast of the United States.
U.S. officials have not said when the missile battery, a new system called Terminal High Altitude Area Defense, will be operational on Guam.
John Harwood has been following the developments today and through the past weeks from Washington, and he is here now with the very latest. Hi, John. What you got?
Hi, Tyler. You know, this is an interesting balancing act by U.S. officials because on the one hand, they're trying to not let North Korean threats and provocations go unresponded to, but they're also trying not to overreact and give the indication that they regard these threats as reflective of imminent conflict or anything of that kind. Jay Carney, the White House press secretary, said on Air Force One today as the president was flying out west for some fundraising and gun control events that this is part of a familiar pattern for North Korean officials trying to obtain concessions by using this sort of provocative language. And of course, now that we have the new young North Korean leader, you have a temptation for him to try to prove his toughness and prove his worthiness to lead that country. But the administration also can't ignore the things that he's saying. The reports that I've seen indicate that the missile defense battery would be operational within about 2 weeks. But I don't think the United States officials expect to use that soon, Tyler.
You know, John, I guess we really haven't heard from the president very much. I heard late today that John Kerry, the newly installed Secretary of State, is going to be traveling to the region within the next few days. What can you tell us about that, if anything?
Well, Secretary Kerry had announced that visit several weeks ago. He will be going to Seoul. That's part of laying the groundwork for the visit by the South Korean President Park to Washington in May. And certainly at both of those events, the Kerry visit and Park's visit to the United States, you will hear the president address the issue. And he's addressed it to some degree by saying that the United States takes these seriously, both through his White House press secretary and other administration administration officials. But the administration is trying to manage a relationship with an adversary that hasn't always shown itself to be rational or calculating in what it said. And part of the problem is, Tyler, that we just don't know what the North Korean leader will do. Their capacity to hit the United States mainland is not believed to be there. They potentially have the capacity to hit Hawaii and Guam, but I don't think people expect that that's actually going to happen. And Jay Carney noted yesterday that they had not seen a movement of forces by North Korea that indicates that they are preparing to strike.
All right, John Harwood in Washington for us tonight. Thank you very much.
In addition to rattling stocks, those worries about what's happening on the Korean Peninsula was one of the factors driving oil lower today. West Texas crude suffering its biggest one-day decline since November 20th. There's concern over Asian energy demand in light of the tensions with North Korea.
As more and more investors rebalance their portfolios, tilting away from bonds, exchange-traded funds that own U.S. stocks are picking up a good portion of fresh money, and the cash is coming from individual investors and traders alike. Seema Modi is here following the story for us tonight. Hi, Seema.
Good evening, Tyler and Sue. That's right. The most recent Index Universe report shows that traders are using exchange-traded funds, or ETFs, as a way to play the rally on Wall Street that we've witnessed this year. Investors allocated $14.7 billion into U.S. equity ETFs in the month of March, and during the same time, international equity ETFs saw a net outflow of $1.7 billion, indicating that not only are traders long U.S. equities, but ETFs, indexes that represent a basket of stocks, are being increasingly used by traders. Now, ETF activity is also many times seen as a good barometer of retail participation in the market. Dan Greenhouse of BTIG telling me that the proliferation of ETFs has given the retail investor a low-cost way to invest and skip the middleman. Another interesting trend is the strength of equity ETF inflows versus mutual funds from 2007 to present day. Now, the divergence between the two continues to widen. Deutsche Bank says investors have reallocated out of higher fee, less liquid mutual funds and into lower cost equity ETFs. And the spread could continue to widen. The analyst at Deutsche Bank, Keith Parker, writes that given the lackluster performance of active managers, ETFs will continue to garner a higher share of U.S. equity inflows going forward as well.
All right, Seema Modi, thank you very much.
Yeah.
Hyundai Motors and its Kia affiliate issuing 2 recalls on more than 1.8 million vehicles sold in the U.S. First, a faulty switch that could cause the brake lights to fail. It could also prevent the cruise control from disengaging. That recall affects some 1.6 million models sold between the years 2007 and 2011. You can find the full list posted at nbr.com. Now, secondly, more than 186,000 Elantras from model years 2011 through 2013 to fix a flaw that could cause injury if the side curtain airbags deploy. The details also available at nbr.com.
And in our market focus tonight, the big Wall Street banks pulled the Dow down, first as investors shrugged at socio-economic data and then dropping further on those Korea headlines. Dow components Bank of America and J.P. Morgan each down more than 2%, and Citigroup and Morgan Stanley also lower today, as you see right there. Abercrombie & Fitch, the teen retailer, led the S&P 500, on optimism about its overseas expansion plans and the company's target of 15% growth in annual earnings. Shares of Abercrombie up nearly 4% on the day.
Facebook holding an event tomorrow to unveil its new home on Android. And it got a vote of confidence from a J.P. Morgan analyst who said, quote, "We'd be buying on recent weakness," and then repeated an overweight rating. Shares were up today more than 3%. Zynga is going to a new neighborhood, launching Zynga Plus Poker and Zynga Plus Casino, real money betting for gamblers in Great Britain. Investors see those as positives for Zynga's revenue right now and positioning for online gambling here in the U.S. down the road. The shares changed hands at 5 times their average volume, gaining more than 14%.
And the 2013 corn crop forecast is the biggest you may have heard in 70 years, and corn accounts for 3/4 of Monsanto's seed sales. The company reported higher than expected earnings today and boosted its full-year guidance. Shares, however, little moved here, up about 0.8% at 104.51 on this otherwise down day. ConAgra, the food processor, also reported today and missed analysts' expectations on both revenue and earnings, but it maintained its full-year guidance. ConAgra sells some familiar brands like Wesson, Ready Whip, and Hunt's Ketchup. Shares there down nearly 2%.
Coming up next, the Obama administration reportedly pushing to make it easier for people with weak credit to get a home loan. Will this repeat the mistakes of the past, or will it help the housing market take off? We'll hear from two sides. But first, a look at how the international markets fared today. The White House is reportedly pushing to make more home loans available to people who have weaker credit. That's according to today's Washington Post. That report says housing officials, including the Federal Housing Authority, are encouraging lenders to be more subjective in loan approvals, taking into consideration, for example, a borrower's savings. And the Post says the administration also wants to make it easier for people to refinance. While the FHA would not comment, we want to dig deeper on this. Joining us with their take, Michael Barr. He is former Assistant Treasury Secretary and is currently a professor at the University of Michigan Law School, and Joe Livornia, Chief U.S. Economist at Deutsche Bank. Welcome, gentlemen.
Thank you.
Michael, let me start with you. As I understand it, you are generally in favor of this, with some exceptions. Detail how you would find this a good plan.
Well, I think the important thing is to get the balance right. Nobody wants to go back to the irresponsible lending of the last decade that really crushed the American economy. The problem now is that credit has gotten very, very tight, and there may be room to find creditworthy borrowers in a larger pool. So at least as I understand it, what the Housing Administration is talking about is providing clarity to lenders about the rules under which they'd put back mortgages in the event of future default. And I think clarity and transparency on that is good. And then secondly, to make sure that the loans that are being guaranteed by FHA are reaching borrowers who have good, strong credit, but who may not fit the existing parameters fully. And so I think getting the balance right is important. Nobody wants to go back to the decade of excess that we're finally coming out of today.
Joe, you're a little bit skeptical. Why?
I think, Taylor, a few things. One, rates, part of it is banks have been not willing to lend in part because of all the litigation and also regulatory issues that they face. So it's not necessarily they're tight for good reasons. And I think as they're trying to figure out what their capital needs are, having perhaps finally gotten past the mortgage putback, banks are probably going to be more in a mood to lend. We have seen the Senior Loan Officer Survey, for example, show a couple of quarters in which prime mortgages are seeing some easing of standards. We're also starting to see a little bit less tightening on the non-traditional mortgages, of which some of these people obviously would be a part of. But I think part of it, Tyler, is this has just been a very deep problem of economic recovery. And I would argue that as home prices continue to improve, the system effectively is healing itself and will do okay. And I think, as we've learned, we don't want home ownership rates up around 68, 69%. They probably belong in the low 60s. And therefore, the people who aren't getting access to credit maybe are generally the ones that aren't supposed to have access to credit. So, again, I think the system is healing on its own at this point. I will leave well enough alone. And as some of these rules get codified for banks, I think they'll be more in the mood to lend.
Michael, though, the trickle-down effect when someone is able to get a home loan and is able to buy a home, the trickle-down effect into the economy can be quite significant.
Yes, I think if you go back and look at what the administration has been doing over these last few years, it's really been quite an important effort in bringing back the housing recovery that your guest was describing. Today, Fannie Mae, Freddie Mac, under conservatorship, the Federal Housing Administration together account for most mortgage lending in the country. And so really it's that effort, the effort to get people a chance to refinance their homes. People who are underwater and not able to access today's mortgage rates, getting them into the system so that they can refinance their home. They've been paying on time, but they need access to those lower rates. And providing clarity of the kind that is necessary on putback risk and on the rules of the game going forward, I think are all critical. And to my mind, that's the path the administration has been on for quite some time, and it's bearing fruit today with improvements in the housing sector that are really quite significant.
You know, Michael, I'd like to stick with you and get you to react to sort of the spirit of what Joe Lavorgna was saying there, that maybe we don't need to have home ownership rates in the high 60%, but maybe in the low 60%. And as I read the Washington Post's reporting, and I can't necessarily vouch for it, but I think they're usually pretty good on these kinds of things, they say that the FHA, you can get an FHA loan with a credit score as low as 500 and put just 3.5% down. Does that strike you as responsible, given the fact that ultimately the taxpayer could be on the hook if somebody defaults?
I think that's exactly the right question, and getting the balance right is critical. If you look at who's getting FHA loans now, it's nowhere near the numbers that you described. I think the average FICO score for an FHA loan today is around 700. So really the question is there room to expand among a slightly larger group of creditworthy borrowers? I think going to no-doc loans or no-income loans of the kind that the financial sector engaged in over the last decade would be a huge mistake, and I don't take that to be anything close to what anybody is proposing. So the key is getting the balance right. The credit conditions right now are probably tighter than they need to be. How do you get them organized moving forward? Through better programs for refinancing, through greater clarity of the rules of the game going forward of the kind that FHA is describing, and further movement by Fannie Mae and Freddie Mac to refinance and modify mortgages that are out there already.
Gentlemen, we'll leave it there. Michael, Joe, thank you both very much.
And coming up next, as the tax deadline closes in, we'll tell you how identity thieves could be filing fake returns in your name, getting your refunds, and you may not even know about it. But first, gold hit a 9-month low today. A look at that and the rest of the commodities, plus how treasuries and currencies fared today.
Coming up tomorrow on Nightly Business Report, we'll see the weekly data on jobless claims ahead of Friday's employment report, and the chain stores will report their sales for March.
Matthew Taylor, a former Goldman Sachs trader, pleaded guilty today to defrauding the bank with unauthorized trades. Taylor told the judge his multi-billion-dollar trading exceeded risk guidelines on the order of 10 times and that he was trying to increase his bonus. Taylor could be sentenced to as much as 20 years.
If you haven't filed your taxes yet, beware. Millions of returns are getting caught in a crime wave, identity thieves filing ahead of the real taxpayer, and they're collecting the refunds as well. The IRS paid an estimated $5 billion in fraudulent refunds last year, but that's just the start. And as Scott Cohn reports, the crooks are hitting the states as well.
And we get that special ID.
Vincent and Darlene have always been careful about protecting their identity.
We need to be really proactive.
So careful now, they asked us not to use their last names. But that caution was no match for the crooks who broke into their accountant's office in December.
Her computer was stolen, and all of our IRS tax return information was on there.
You have those sick feelings of anger and all that, the dread, the worry, the work, to repair and restore things.
Because not only did the crooks file a fake federal return with their ID, they filed a state return too, maybe lots of them.
We're going to probably have to be careful for the rest of our lives.
For crooks, it doesn't seem like it could get much better than this. After all, why file just one federal return when you can file in state after state after state?
Vincent and Darlene can be thankful they live in Georgia, where it turns out the state revenue commissioner knows a thing or two about this crime.
A couple years ago, someone got a hold of my wife's name, Social Security number. They filed a tax return in her name and got a refund. It got processed through the IRS, got processed through the state of Georgia.
Georgia has beefed up its enforcement, and it's teamed up with LexisNexis, which filters every return through its vast database. If something doesn't add up, the filer has to answer some questions.
For example, here's 4 addresses. Which one didn't you live at? Here's four cars. Which one do you own?
They say it's working. Last year, nearly $100 million in fraud stopped before the refunds went out the door. But Georgia is just one of 43 states with an income tax. So even if the crooks can't file here, they could just try someplace else. For Nightly Business Report, Scott Cohn, Atlanta.
Fascinating story. Have you ever been a victim of identity theft?
I have, knock wood, I have not, but I'm very fearful of it. I really am.
I was once. Happily, it was not a very bad case, and I was able to untangle it quickly. But if a thief gets a hold of your Social Security number, it can take you months, literally,
if not years,
to untangle it.
Absolutely.
Well, a big milestone today for the cell phone. It was 40 years ago today that the very first look at that thing, the cell phone call was made. Marty Cooper, an engineer from Motorola, placed the first call to a friend at Bell Labs. According to Pew Research now, 87% of American adults have a cell phone. The first cell phones cost nearly $4,000, weighed more than 2 pounds, and were the size, if you can recall, of a brick.
Oh, that's it for the Nightly Business Report for tonight. I'm Sue Herrera. Susie's back here, right here tomorrow. Thanks for watching.
And I'm Tyler Madsen. Have a great evening, everybody. We'll see you back here tomorrow night.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
I'm Tyler Matheson with a Nightly Business Report news brief. Stocks retreated broadly today in the worst day for equities since February 25th. 2 economic reports get a share of the blame, and rising tensions on the Korean Peninsula compounded the worries and the sell-off, especially from midday on. Those fears of a weaker than expected economy also hit oil and metals. Gold touched its lowest level since last June 28th. Financials and energy shares led stocks lower. At the New York close, the Dow was off 112 points at 14,550. The S&P dropped almost 17 to 1553. And the Nasdaq, the biggest loser in percentage terms, was down 36 to 3218. Hyundai Motors and its Kia affiliate issued 2 recalls on more than 1.8 million vehicles sold in the U.S. And U.S. Airways says the sequester hurt its March revenue. Tune into Nightly Business Report here on your public television station.